On the other hand, I think one particularly promising company in the healthcare space only pays out a 2.09% yield. That company is Amgen, but their future to me looks promising enough. Would you agree, Todd?
Amgen's an interesting stock. I mean, you can look at this company and say, wow, this is a pioneer because it was one of the first biotech companies to launch and roll out biologic drugs, generate lots of revenue, so much revenue that they were kicking out extra cash that they could then return in the form of dividends. Typically, in healthcare, you're talking about dividend paying stocks are typically pharmaceutical companies or medical device companies, not biotechnology stocks like Amgen. So you could look at that and say, wow, Amgen's got one of the longest track records in biotech of paying out money back to shareholders via the dividend. What's its business look like? You could argue that it looks really good because they're working on a ton of new products, including Repatho, which was recently approved for the treatment of high cholesterol levels, and that could be $1 billion drug. They've also got 9 different drugs in trials that could be generic alternatives of top-selling medications called biosimilars. Those biosimilars could be coming in the market in the next few years and generate billions of dollars in revenue for the company that way as well. But there are also some risks with Amgen, namely biosimilars that are being developed at other companies that would challenge Amgen's drugs. For example, this past year, Novartis won approval for an alternative to Amgen's Neupogen. And recently, last week, I believe, Sandoz, which is Novartis' generic unit, filed for approval of a biosimilar to Neulasta. Now, those two drugs have, a $5 billion a year run rate, and Amgen has 20 billion in sales. So, this is one situation where I feel like they've got enough in their pipeline to not for this not to be a problem. But there are some risks that are associated with it as well.
Yeah.
And the last comment I would just make on Amgen is, and this is an important thing to consider, I always look at something called the cash dividend payout ratio. Now, what this does is it says, okay, rather than looking at earnings, which, accountants can game a little bit, let's look at the cash flow that's being generated by the business and then see what percentage of that is being paid back to investors in the form of dividends. If it's a high, like a 1, that's bad. At Amgen, it's not worrisome. It's not a high number. I think we're going to be okay there.
Yeah, it comes in right around 26%, which means there should be plenty of room to continue growing the dividend. Or if earnings were to shrink, if biosimilar competition is more of a threat than currently it seems like it would be, there still should be a little bit of a buffer zone for the business itself. You made a really interesting point earlier about it being kind of rare to find dividend-paying biotechs. Recently, by recently, I mean February, so sort of recently, Gilead Sciences started paying out a dividend, and it never had before done that. And it was a small dividend. I think right now the yield is around 1.5%, but it's kept it steady payout since then. And it has raised this interesting question to me of, do we want to see biotechs paying out a dividend in the first place? I mean, as investors, it's great to get a check in the mail, especially if you're going to reinvest the dividends. But for a biotech company where so much of the company's worth has to do with the pipeline and the research and development spending, don't we want to see all of their cash going straight back into R&D?
Yeah, I mean, this is an ongoing debate in the industry, and investors really are come down on both sides of the fence here. If you're paying a dividend like Gilead decided to do, in theory, you open up the investor base to, let's call them more steady hands. People who are dividend investors typically are not looking to trade in and out of stocks, okay? They're looking to make long-term investments, and that means that you've got less volatility in the share price, which means that you have more insight into your ability to raise money in the open markets that can be then used to help develop new medicines. So on the one hand, yes, dividend payments take away money from R&D, right? Because obviously if you're spending that money back to investors, you're not plowing it back into your own drug development, right? But at the same time, it also creates a more desirable shareholder base that over time can be more consistent.
Yeah, that's a really good point. I mean, dividends are a long-term kind of game. I mean, you're not going to hop in and out on a daily basis of dividend stocks. That's just not how this all works.